Hi, hello friends, welcome everyone to Precision Price Action Pro Trader series. Today I am going to explain you how James Cordier went from a successful trader to a bankruptcy situation. In the previous video I explained you the high level story of James Cordier's journey from the best selling author to a bankrupt fund manager. In this video, we are going to deal in micro detail the entire process he went through and also the current status of that case along with all his investors. Let's deep dive. So you all know him by now. It's very unfortunate once a very successful man landed in such kind of a problem with just one asset class, that is natural gas. What are the three mistakes he did? Number 1, excess leverage. Number 2, over leverage on a single asset, only single asset. Number 3, no hedging. Excess leverage, single asset focus, no hedging. These three are the fundamental mistakes that James Cordier did, which destroyed his fortune. Now, let me show you something. What do you see here? This is a beautiful chart of natural gas futures. Alright. Now, alright, look at this single candle. That is the candle where 8 years high happened, and this is the candle, the 15-year low happened, and this is the 8-year high. So all calls were destroyed here, all puts were destroyed here. As a result, he lost all his fortune. Remember, this is a multi-year resistance. See how candles are playing here. Suddenly it went into a solid bullish level, and this man never understood that a 8-year high is coming followed by a 15-year low on the very next day. It's an impossible situation. Anybody who had taken that kind of a position that day would have lost their fortune. The only way to escape that massacre is by following those three principles which I just mentioned. Now, first things first. This is the volatility chart of natural gas futures. Okay, this is the volatility. Now, for example, let's say you are a very smart option trader who always is consistently making money. Alright. Now, let's do this. Suppose this year you trade 10 lots. Whole of this year. Why? Because you are just writing OTM calls, OTM puts. It is well within these two lines. It is well within these two lines. You will definitely make money. Yes, you will make money. Successful trader, happy trader. Next year you will trade 20 lots. Why? Your portfolio increased. The value of your overall portfolio has increased and you are consistently making money. You are a superstar. You start raising more funds, collecting more capital from the customers. Next year you make 20. Next year you trade 40. Next year you trade 80 lots. Like that you keep trading and increasing your lot sizes. Correct? What happens? Over the period of time, from a normal 10 lots, you would have gone to a 5,000 lot story. That's almost 500x growth in your capital. This is what has happened to James Cordier. He started small, yes. Look at the success. This is the volatility. Price never closed above those levels. He was extremely happy, but one fine day One fine day, something crazy happened. Look at this. Look at this. This is your levels. You would have taken OTM calls and puts, but the volatility went beyond. A scenario which has never happened in the last 10 years appeared on that day. You started selling 5 rupee, 10 rupee options, you were making all money, but that day when your lot size increased extensively, you are trading 50 times, 100 times, 500 times more than what you did 10 years back. But your 5 rupees option, 10 rupees option becomes 50 rupees, 100 rupees. You buy at 5 rupees, 10 rupees, you are selling at 50, 100 rupees. What will happen to your portfolio? This is the whole story, the most dangerous story. It will be a crisis where you can never imagine in your life. Nobody can imagine. The only way to escape is to avoid those three things: excess leverage, single asset focus, no hedging. If these three things are avoided, that will not happen. So market doesn't care who you are, whether you are a retail trader, fund manager. If you miss the fundamentals, it will punish you big time. A big time. And you have to see his apology video. Go to YouTube and type James Cordier apology. You will come to know what is happening with him. It's miserable. Sometimes even I felt like crying. And what a story it is. His clients cried, he cried. What to do? It's very basic. Hedge fund without hedging. You know the status right now? The case is currently in the court. All the 290 investors lost their money. And many investors are in 70s and 80s now. That is another very big blunder. It's a crazy blunder. Why the hell people in 70s and 80s are doing derivative trading? Why are they doing speculation? They should be sitting on a retirement fund which has least risk. They are not supposed to trade on a derivative asset. And they are shuttling between the courts today. Imagine this mental makeup. The one investor passed away last year. They all went to the court to sue James Cordier, who is already bankrupt. What will he do in the court? He will say, I did a mistake, send me to jail. And in that many people died. Many investors are still settling trade balances. You know what is trade balances? I explained you. You invest 25 lakhs, he lost the 25 and it went to minus 10 or minus 15. So you need to give that trade balance to the broker. The broker will sue you. And finally, Cordier is still living king's life in Tampa area in the US. The case has gone to the court. It's not a criminal case, it's a financial fraud. It's not even a fraud, it's a trade. He can escape easily as a fund manager. He would have taken signatures everywhere. He is happy. But his clients lost it. Why? Because of the three fundamental mistakes that James Cordier did. And finally, he never declared bankruptcy. That is the funny part. He never declared bankruptcy. Because bankruptcy laws in America are very strict. Imagine the fate of those people in 80s shuttling between courts daily, assuming that they might get some money. I am telling you, there is no way they will get their money. They will go to their graves without getting back their money, because that money is gone. And there is no way they can recover it from James, and he is legally fine. He is morally wrong, legally right. I repeat, he is morally wrong, but legally he is right. Because he traded. They would have signed many papers when they gave their portfolio. So he will not be punishable by law, and he will continue to live his king's life, probably earning money from his best authored book. However, the agony of the investors would continue because they didn't do proper due diligence. So what is the moral of this story? The moral of this story is three things. Number 1, never ever trade excess leverage. Number 2, do not push all your positions onto a single asset or a single trade. We always talk about position sizing, we always talk about betting size. We take 1%, 2%, 5% risk. Why would anybody take 100% risk on a single trade? This is absolutely gambling. This is nothing but gambling. And third, if you run a so-called hedge fund, you better hedge it or put a stop loss. If you don't have an hedge, if you don't have a stop loss, you are fundamentally wrong. These are the 3 important takeaways from the story of James Cordier. Let us pray good for all his investors, and I hope they get their peace, if not money. And let us learn these 3 important lessons from the story of James Cordier, because your life is too short to learn from your own mistakes. So let us learn from James Cordier's mistakes. Alright, I will come back to you again next in the next video with yet another interesting story. Alright, until then, signing off, Ashok Devanampriya from Traders Gurukul. Thank you.
Are you tired of stock market losses? Tired of hundreds of boring indicators and the frequent drawdowns? Do you want to understand how to trade markets without indicators? How institutions cheating the retail traders, and how to make fair and consistent trading methods? The answer is IT3T Mega Webinar, India's most comprehensive and 100% money back guarantee training program for stock market investing and trading. And what do you learn from this webinar? Techno fundamental investing, WD GAN techniques, precision price action trading, the option trading strategies, algo trading, and also trading psychologies. So it is a package of 200 world-class investing and trading books jam-packed into the 12 days of webinar. And what you can expect from IT3T: genuine training program with examples and assignments, no indicators, real-life examples, proven and reliable methods. And what you shouldn't be expecting is holy grail formulas, zero loss strategies, 90% win rate stories, get quick rich Ponzi schemes. And we also have students across the globe. The 3 things IT3T always promises is 100% money back guarantee program, 100% brokerage credit, 100% lifetime learning. But that's not it. We have an early bird offer for you at just 35,000 rupees for first 25 students. So how do you enroll the IT3T program? Simple. Just log on to www.i3t3.in or contact our webinar manager